This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 214. Good tax, bad tax.
Income tax, sales tax, council tax, car tax, capital gains tax, inheritance tax. There is just so much tax. So obviously it needs simplifying, but that would be like my daughter tidying her bedroom. It's gone way beyond any stage that normality can be resumed. But if you were to redesign the tax system, what would be your objectives? To raise revenue? Nope. To ensure a more equal society? Perhaps. We'll look at the role of tax in levelling up the economy today on the Debunking Economics Podcast with Professor Steve Keen. I'm Phil Dobbie. Welcome along. So, Steve, we talked recently about how to level up the UK economy, which is something that Boris Johnson has promised that he's going to do. How is he going to achieve that? We talked about that on the podcast. And one comment on that podcast was that we didn't talk about tax, which is a fair point. And yet the whole point of tax, as you know, is not to bring in revenue for the government because they can create that money through their own central banks. It's really to ensure exactly what we were talking about, that the distribution of income is equitable. How did we avoid missing that? But look, Jeremy Corbyn said when he hoped to be Prime Minister in the UK that there would be no billionaires in the UK. So that's the opposite of levelling up. He basically just wanted to chop off the incomes at the top. But billionaires, of course, can run businesses that make lots of money and employ lots of people. So that's probably not the right approach, is it?
Well, it's a combination of the two approaches, and this is what I have designed Minsky, my software package, to cover in the first place, because the basic attitude that most people have to taxation is encapsulated in the phrase, it's taxpayers' money. In other words, the government is spending money that it gets from taxpayers. And that puts an emphasis not just on the fairness, which of course is where we're talking about the complete failure of the system to be fair right now. The burden falls far too massively on the poor and the middle class, and far not enough on the wealthy. But it is also the argument, well, the government's taking money out of the hands of the private sector. It's everything is seen in terms of the government taking. And
that's because of the belief, and we can touch on this very briefly, but we've covered it so many times. The belief that the government has to get the money in to be able to spend it.
Yeah. And in fact, as government, because it is the government, it has the capacity to spend it in its own right. And I've actually did a bit of I haven't had a chance to put up a proper video of this, but I did a conference with the Fields Institute on this just last week about the whole issue of taxation and government spending. And when you put it down to the absolutely simplest level, the thing that the government does is enable the non-government sector to be in positive equity. And that might sound like a weird way to start a statement about the role of taxation. But if you had a pure credit economy, if you had an economy in which there were no government whatsoever, the sort of Austrian wet dream, and of course you had to have banks in that, because whether Austrians want banks in their wet dreams or not, banks are an essential part of capitalism. And banks, to operate as banks, must have positive equity. Now, if they have positive equity, by definition, the non-banking sector is in precisely as much negative equity. In other words, the whole idea of a fantasy of a pure credit economy leaves, if it did exist, the private non-bank sector would be in negative equity. That's a given, okay? And that's the point that the Austrian free market fanboys don't include in their logic, because they effectively have a vision of money as a commodity, and money is gold and stuff like that, and therefore we can all go and find a gold mine, we can all go and dig up gold, and we can all increase our holdings of gold simultaneously. So what they want is a world where they not only abolish governments but abolish banks as well, which of course is not at all capitalist. It's another intellectual fantasy. So I want to start from the real world and say, if we did have a pure credit economy, if there was no government, then by definition the banking sector has to be in positive equity. Therefore, the non-banking sector must be in negative equity.
Right. Now, so the only way you get around that actually is to have the government, and the government is creating the money to create that positive equity.
Yeah, and it does that by spending more than it gets back in taxation, which it's quite capable of doing within the constraints of a national economy, because it produces the money that's used in that national economy. So there's no problem about the government. The government doesn't need to tax in order to spend. In fact, it needs to spend to give us the money that enables commerce to occur in a conventional fashion, and that also discourages us from getting caught up in asset bubbles, which is what we do when we have a pure credit economy, because we try to get ourselves into positive net equity. How do we do that? We buy shares whose prices are rising. We value the share at the price they're currently selling for times the entire outstanding stock of shares, which is an impossible calculation. It can't be fulfilled, but it fools us all into believing we have positive equity.
So is that the only reason that we have tax then? I mean, obviously for most people it's the idea that we're creating money for the government, but in your mind the only reason we've got tax is to try and stop people spending badly. Seems to be what you're saying. Putting it into asset bubbles.
Not just spending badly, but take the money out of the circulation, because the government these days is too big to simply pump the money in and leave it there. If I had a chance to design an ideal monetary system, I'd design a form of money which depreciates over time, which is the idea that Gazelle had back in the 1920s and 30s, and Keynes was a great fan of that concept. We don't have just depreciating money. We have money that maintains its nominal value indefinitely. And therefore, if you go back to the size of the government back in the 19th century, most governments were the order of 5 or 10% of GDP. And that amount of spending, it didn't really matter that they might finance all that spending just by printing notes, so to speak. And then the taxation burden didn't fall on the middle class, because income tax, I don't think income tax was introduced until the Second World War. And if you look at people think, well, they had to bring in taxes to finance the war. Not really. You had to bring in taxes to take the money out of circulation, because at that scale the government deficit was into the GDP, for example, of the UK in 1940 was 40% of GDP. Now, when you're pumping that much money into the economy, even when it gives you a full employment economy, as it did during the Second World War after the Great Depression, that amount of money will that's where the upward pressure on prices is going to come from. Right. That's where pressure for imports is going to come from. Yeah. So you do want to take the money out to stop it causing those overheating factors in the economy.
Right. So there's another reason for it then. It's the one tool you've got to control inflation. In fact, more effective than anything central banks are trying to do.
One of the tools. I mean, the other thing, like having the idea of the prices and incomes of court Australia had back in the days of the Hawke-Keating Labor government, even though it was bastardised by the mainstream economists and Treasury, and I have first-hand experience of them doing that, so I'm quite happy to use the term bastardising. But even that was another way to try to control the rate of inflation by controlling the level of wages and the rate and the markup on costs. Those are other aspects that you control the inflation rate with. But the real problem about taxation as it is now is that when we brought in income tax, and we have broad-based income taxes as well, it's very, very difficult for a worker to disguise their income. In fact, it's basically impossible for them to disguise their income. So they end up paying their full income tax burden. But if you're a wealthy individual and you can locate your business offshore, which is even better, and you have other governments taking advantage of that, then you end up paying no tax whatsoever. And what happens is you accumulate the dollars the government's trying to take out of circulation. And rather than getting inflation as a result of it, you get a concentration of wealth and economic power, which is what we have now.
Yeah, so, which of course is one thing that tax is trying to tackle. It works at the other end as well, of course, at the very bottom, you get cash-in-hand jobs. But I mean, the amount of money that's spent on cash-in-hand jobs is small, obviously, compared to the amount of money that's siphoned off to offshore accounts by the top earners. But look, figures from the Institute of Fiscal Studies, which is hardly a socialist organisation, reckons that by the time you factored in income tax, VAT, council tax and all the rest, the top 50% of households in terms of income pay 78% of taxes, 50% paying 78% of taxes. That doesn't actually sound that progressive, does it really? I mean, you'd expect that. I mean, we often hear the quote that they are paying the overwhelming majority of income tax. But then in the UK, and I think it's the same everywhere else, we've had all these other taxes that have been introduced to almost level that out. VAT, of course, and sales tax being one of those. So that concentration has been washed away quite a bit over the last couple of decades.
It has, but you can understand part of the motivation of why it happened as well too, because I do remember back in the late 60s, early 70s, the top marginal rate of taxation in the UK actually topped that at about 99%. So for every extra dollar that the Beatles got from selling the White Album, 99 pence of it went to the government rather than to the Beatles. And that was a major encouragement to say, why don't you move your operations offshore and dodge taxes?
So there is obviously an optimum level for income tax, but there's many more taxes as well, and we discussed them all in the full version of this podcast, including some sort of slightly out there ideas about maybe how the tax system should work. To hear it in full, you need to become a supporter of Steve Keen on Patreon. Go to patreon.com/Prof Steve Keen, or you can subscribe at debunkingeconomics.com. I'm Phil Dobbie. He's Steve Keen. We're back again next week with another one. Thanks for listening. If you've enjoyed this podcast, then please share it with your friends, like it on YouTube, and subscribe to this channel.